you must consider your entry strategy, your trade management, your money management, and of course the psychology you are meant to keep while you are in the trade. Now, you see, as a trader trying or aspiring to be successful at trading, you have to let go of pressure and focus on the things you can control. Hello, my name is already Samuel. I'm a forex trader, and if you are just coming across my channel for the first time, do well to like, subscribe, and turn on post notification. As well, I would like to see your comment in the comment section so as to know your thoughts about the videos I make, and I will know where to improve on. All right, let's just get into the video. Now, talking about the things you can control as a forex trader, the very first thing you have access to control is when you enter a trade. The second one is when you decide to exit the trade. The third one is you following your system, building and following your system. That's a very, very crucial point, which I will be talking about later in this video. Being consistent and also collating data from your past trades and analyzing it to know if the system you built is actually sustainable. Being sustainable, I mean being profitable. Now let's explain everything I've iterated one by one. The first thing I made mention of is when you enter the market. According to your strategy, you must have a reason behind you entering a trade. Now, if your confluences are not being met, you are not meant to enter a trade. That's one thing. That's one thing you have access to control. You might not necessarily have access to control how the market is going to move after you've entered the trade, but what you have the ability to control is when you enter a trade. Now, all your confluences are being met, you've entered that trade. Now, that's the only thing you can control. The second thing I actually made mention of is when you are going to exit that trade. Now, according to your system or according to the strategy you are using to trade, rather, is be it SMC, ICT, pure price action, any strategy. Now, you must have an exit plan. Probably when you are seeing weak rejection upon a key zone, it might be probably a psychological level, a supply level, or a demand level. Probably when you see rejections there, according to your system, you are going to exit the trade. That's very, very important. You must have when you are entering the trade, you must also know when to exit the trade. That's very, very important. Now, moving to the third one. The first 2 points I actually gave is actually dependent on this third point I'm giving, which is following and building a system, or better said, building and following a system. Now, in building a system, you must consider your entry strategy, your trade management, your money management, and of course the psychology you are meant to keep while you are in the trade. Now, talking about entry strategy, I actually talked about it in the first point. Those are the confluences you see before entering the trade, and of course when you have to exit the trade. That's very, very crucial. Talking about money management, knowing the amount of money you are risking per trade is very, very important as well. If you are going to be successful as a trader, it is very, very crucial. Having a trade management plan is very, very important. You must know when to cut your losses. You must know when to break even. You must know when to reduce your loss or reduce your stop loss, and you must know when to add more positions. Most people are actually making mistakes of adding positions even when the positions they've opened is not actually secure. That means they are exposing their accounts and over leveraging, which actually hurts most of them and puts them in a very huge risk strategy, which is not actually good for the account they are trading. Now, moving to the next one, which is the psychology you keep when you are in the trade. You must know when you are in a trade, you don't think while you're in a trade. Before the thought or any thinking you are going to do must be before you enter a trade, because if you are making decisions or thinking when you are in the trade, you are actually going to hurt yourself. That's very, very important. So you must know I'm entering this particular lot size upon seeing my confirmation, when probably the market retraces, I add another positions. When I see another bullish momentum, I add positions. All these things must be in place so you don't make huge mistakes when you are in the market. I hope that actually gets there with you. The next point I actually have here is being consistent. You must be consistent in the strategy you have built. Now, you don't just trade strategy because probably you are having a losing streak or you are having a winning streak. Most traders, the mistake they actually make is whenever they are in a losing streak, they tend to change their strategy. And this same strategy has been a strategy that has made them probably like 10, 15, 20 wins. 20 wins in a row. While all of a sudden you are making losses, probably you took just 2 losses and you feel like you want to change a strategy, you want to change something in your strategy. No, make sure you back tested your strategy and this thing works. you don't just change your strategy because you are in a losing stage currently. Now that brings me to the next point I'm going to talk about, and that is collate the data and learn from it. Now, from your past trades, from your back tested trades that you've done, collate the data together and check if the strategy you are trading is very efficient and is good for the market condition. Now that is where journaling actually comes in. And journaling simply means you collecting or having a back data of your trades. It is very important, and that cannot be overemphasized. If you want to be successful as a trader, you must have a record of your trades, and you have to be learning and visiting it every time. Now, to create a journal, you must actually have a space for your post analysis, your ongoing trade report. You must have it included in it, and also you must have your post trading analysis, what you felt you done wrong, so you won't repeat it in a later day. I hope that actually gets with you. I'll be sharing the trades I actually took last week, and this just concluded week later in this video. Make sure you watch to the end of this video, like, subscribe to the channel, turn on post notification, and of course share this video to traders that are just coming into the forex space, newbies most especially, because in the coming days I'll actually be making beginners friendly videos so they can have access to it. Now let's get into the last week trades, and this just concluded week's trade.
Alright, so this is the overview of the trade I actually took last week. So I was heading the trade around this region here. Upon the close of this candlestick, actually entered, and it actually started going in our direction. Well, I don't know, there was no news, so I saw that huge spike to the upside, and it came back to this to killer stop. So that was the only trade I took last week. So you can see there's a psychological level there, so, and I was seeing the bullish momentum building up, but then market decided to do its thing. So moving to this week, you see I couldn't take any trade. Again, I was actually not seeing set up on Friday. I was supposed to enter this buy position, this around this region, but I was not around this region, but I was not on the chart, so I missed that as well. So that was how last week went. So this is for this week. As usual, I marked my high and low of the week, and upon the break I knew the market was already building a bullish momentum, but I don't trade on Monday, so I did not enter any trade on Monday. So on Tuesday I entered this setup. So what I was looking for was actually just simple. I was looking for price to break out of this recent high, this high created here. This high, let me bring out horizontal to horizontal, this high. So I was waiting for price to break out of it. So immediately I was even in this trade from this region here. Okay, let me just annotate it. I was in this trade from this region. Sorry. So immediately from the break I was in the trade already. So so from the break I actually entered the trade. So the market kept ranging before going into our direction. Then immediately after some few pips reaching after it has tapped our take profit, then it started coming down. So that was pretty. Let me just remove this, it almost confused me. Alright, so okay, let me undo. Okay, yeah, that's it. Now that I'm seeing this region here, this place where the observatory is serving as a resistance level, you see, and it came back, price came back, tapped it, it became a support. So I was looking for price to just break below. I was looking for price at this region, this region, to just break beneath the support. So I saw a bullish candle closing below it, so I immediately opted in for a sale, and market just was just indecisive before it just went to take her stop loss. So that was what happened. So at least for this week I'm up. No, I knew I deleted something. Is it back? So let me delete this like this. No, delete. No. So for this week I'm up just 1 hour. So the following trade I took was on Thursday. So what did I actually see that made me enter into this trade? So I was seeing a break of this psychological level. Actually, I was just looking for price to just break above this particular psychological level that I have here. This one, let me unlock it so it can be here. This one, I was looking for price to break above it, and it did break above it with a bullish candlestick. Then immediately I saw the close of the candlestick, I opted in for the trade, and there's also a trend line coming there. So all this move that happened there is just an overextension to the downside. So I was waiting patiently. If it breaks this trend line, then this trend line successfully, I'm waiting for price to just come. And there is also a support zone here. You can see this yellow box. I actually drew a rectangle box. I drew that yellow one. Let me go back. The yellowish one. So that's actually a major support zone. Then after I tapped in, I waited patiently for it to break out of this psychological level as well. Then immediately I saw the close of the candlestick, I opted in for a sharp 1 to 2. Then that was just simply risking 20 pips to catch 40 pips, and immediately it reached our static profit. Market started tanking down. So that was just pretty much the trade. I actually did not enter any trade yesterday. That was Friday. I did not actually enter any trade, so that's just the trade I took. So I had just one loss this week, and then I'm up 3R this week. So that's it's a good week. So that's the review of the last week's trade and this week's trade. I hope you just learned a thing or two.
If you've seen this video up until this extent, please make sure you like, you subscribe, and you comment in the comment section, so I will know if you've learned 1 or 2 things from. Of course, I know you might have learned 1 or 2 things from this video as well. Please do well to share this video with beginner traders, traders that are just coming into the forex space, and please turn on your post notifications so you'll be one of the first person to get access to my video or be notified whenever I post a video. Thank you, God bless you, see you in the next one.